Broadcast. Welcome to Friday, June 7th edition of the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I am Zaner Ag Hedge Joe, and I'm here with...
Dan Hussey from Zaner Ag Hedge.
Well, I thought we lost you there for a second, Dan. Welcome. Friday afternoon after kind of a wild and woolly week price-wise for the agricultural markets. Also... funny thing I wanted to tell you about, not even remotely agriculturally related, but I did a little bike ride yesterday. I rode halfway here to the city and then took a train in for the remaining distance, which is always terrific. Riding on public transportation in Chicago, just a great time. And then I turned around because of that horrible experience and rode the entire way back to my house where I was able to go to sleep. But here is the funny thing that happened, Dan. You bike too. You rode yesterday?
Just a few times a week. Yeah, I rode Tuesday and Thursday this week, usually like a Wednesday, Friday, Sunday thing. But Tuesday, Thursday got out for a good 30 miles. We usually start at like 5 a.m. and we're done by sometime just before 7.
And so I'm riding home yesterday. That's bright and early. My goodness. It took me a minute for that to register. I'm riding home yesterday and I had just a tremendous ride. And about halfway home, I looked down and there is a driver's license on the ground. And I thought, well, I better pick that up, and picked it up. And it was a young woman on the driver's license. And I thought, well, I'm very interested in returning this to her because it's just the right thing to do. Give a young woman back her ID. If I had lost my ID, I sure would hope somebody would return it to me as well. And I looked at the address on the driver's license and typed it in, and that address appeared to be the brewery that was right down the street. And you know, Dan, when I'm bike riding,
like a sign from God.
Well, that's what I said, is that the universe has spoken. And when it took me, there's two buildings. One building was the right place. One building was not the right place. Of course, I went to the wrong one first, went back to the other building, walked in, and I said, the universe has spoken to me. I must enter and return this driver's license to Aubrey. And certainly they're thrilled to have it. She had gone away and was coming back to get her driver's license. But as you said, message from the heavens, why not have a beer while I'm still 20 miles away from my house? And of course, you know, you walk into a brewery in Hammond, Indiana, and of course you're going to meet somebody that you know or that you'd like to know. So one turns into X plus, and then there are two other breweries on the way home, and of course might know somebody in there. And so having left the office late afternoon yesterday, I was able to arrive back at my house slightly worse for wear at 9:30 p.m.
Wow.
Yeah.
I mean, you took a nice tour of the Hammond area, got to partake in all the watering holes. And I think it was Benjamin Franklin that said, beer is proof that God loves us and wants us to be happy.
And certainly that was the case yesterday. However, today I am just slightly not on the old game, as I'm an old person, and 2 or 3 or 10 beers has an impact on old people. So this is a story that I want to mention just in case as we go through here and I start fumbling things, people will know that this week, the 3 listeners will know this week there's a reason, as opposed to normally there is no reason, and I'm just not good at this. That's all.
Well, you don't look like you're struggling or dragging your feet here, but like you said before, this week was a little bit of a turbulent one for markets. It started off really, bloody and red. Seemed like yesterday we were going to have a little bit of a hope of a recovery here, bouncing from some interesting levels. But man, today didn't leave you with much of that hope left in the sails, I'd say, by the time the bell rang.
What a wild ride, and just a great intro. If listeners will allow, I'll jump. Let's jump right into the weekly numbers. Specifically corn. So corn opened the week at 445 3/4. The high was 454 1/4. Hold that number in our heads for just a second. The low was 438 1/4. Last 448 3/4 for a weekly change up 2.5. Funds short an estimated coming into the day. Funds short an estimated roughly 160,000 contracts. That 454 1/4 number and price action. Not terrible going into the close. It was a nice comeback going into the close. However, that 18-day moving average
Absolutely.
overhead, right? Our merely derived 18-day moving average overhead at 454 and 3/4. We were unable to even get over that number, let alone close
Right.
over it, right? That 448 and 3/4. Not, and here again, not a great look. Um, Price action. What do you think? What do you think about what happened here this afternoon?
You know, I was earlier this week, I was kind of hopeful we started to see some of that support coming in where we saw support from before in April and into March after the February, I don't want to call it a contract low, but effectively, the recent contract lows that the market had rallied from. We came down to test those levels, and really for this entire week, we were holding those levels firm. It was like a 460-ish area on the December corn, about 440 there in July corn. And eventually, yesterday it kind of felt like, oh, well, here the short covering's coming back, right? Tuesday, they painted the tape all red, got that CFTC commitment to traders report, which we'll have out today here shortly, and those estimates out tomorrow or today shortly. That were read on Tuesday, right, where we are effectively at lows of the week in that tape read. Then we scurried on back to up to that congestion zone that I know a lot of people are talking about. The 18-day capped it to the tick, but there's also the 55-day and 100-day moving average, which we fell back below in both the corn and December and July corn contracts, as well as, unfortunately, and this is the kicker that I hate, that upward sloping trend line that was holding February through March and through the May low. We broke below that level, and now we came back up and tested it as resistance, basically right at that 18-day moving average. I'm going to flip over my chart that I'm looking at to confirm. Yeah, the December corn didn't quite make it to that 18-day, but it did hold that congestion zone of the 55 and 100-day all the same, right? Big technical levels. We had worked and struggled so much to get above earlier this month. Well, I guess last month now in May, and now we've fallen back below, rallied up to test broken support maybe as resistance. You can make a strong case here that the market's trying to signal for a technical reversal lower, even though today, like you said, great price action into the close in terms of a recovery. And really, you can't chalk it up to anything more than, yesterday's nice rally, some back and fill price action
Back and fill,
today,
sure.
and then, kind of Peter pattered off there wasn't a flat close for the day, but okay, the market took pause. It's a Friday, and
Export
leaves us
sales. Go ahead.
right. No, and exports actually for corn were better than expected this week with some flash sales to
Really,
boot.
really
So
decent, and some corn to China, but switched out of unknown. So 6 in one hand, half dozen in the other there. But
absolutely
really decent price performance in the face of all that weakness in the started in the overnight, predicated, I guess, on a change in that weather. So we're all talking hot and dry.
right.
Yesterday, they took a little bit of the hot out in the first week. Weather subject to change. Maybe we got to show up and wait and see how that plays
And in
out.
my humble opinion, June 7th is a little too early to really be talking about hot, dry, and a weather market, right?
Was a heck of a weather market for one day, though. I mean, that was one of the best one day weather
Yeah.
markets we've seen in a while.
And I think some of the springiness and explosiveness to the upside of this market, I think it has a lot to do with the fact that those funds are still 150,000, you said,
The
estimated
structure,
short.
yeah,
If
about
they get spooked
160.
for any reason,
Right.
right, they're going to buy it right back up to the levels from whence they came to take profits and get out because they're only beholden to their investors and to profits, right? They really don't care about anything other than their P&L.
Couldn't happen to a nicer bunch of guys. Wheat, we opened the week at 678. The high was 697 and 3/4, low 618 and 1/4. Last trade for the week, I saw 627 and a half. Yeah, that noise right there. If we had that on a button, this has just been a nightmare of a week for wheat. Down 51 on the week with an estimated fund short position at about 50,000. And so now dueling merely derived moving averages happening here. You got your 10 and the 18-day overhead, but you've got your longer term stuff, your 50 or your 55, your 100 and 200 bounding the lower end of the range, correct? And so we're smack dab in a technical no person's land.
That's right.
If I don't have a chart in front of me like you do, but if I can imagine it's been 8 days down in a row, which is a lot for wheat.
Right. We did, and I would have said 8 days of, and even more than that, of higher highs and higher lows. But we did have that one outside day to the downside then there on the third. But yeah, 8 red days in a row here. Close was lower than the prior days, below the 18-day for a week now. And like you said, right back into that 55 and 200-day moving average as support today, which, by the way, we are about to get that golden crossover, which I mean, price action still above, so very likely they will cross over here into tomorrow. But generally speaking, the market's pulled back into a 50% retracement of its entire rally. If you take even a bigger step out, and you can see it on the chart that'll be on the screen here, there's a big channel lower. You could make an argument that we fell from in wheat. And if it doesn't find support here, you got to ask yourself, are we just going all the way back down from whence we came? I would imagine at some point we're going to see some short covering back to test the 18 days resistance if this wants to continue lower. But until there's a reason to be a buyer in wheat outside of maybe the big daily technical levels like the 200-day or 100-day here, you're picking a bottom. And you're also picking a bottom, I want to point out, in a market that since the start of June has generally seen increased daily volume in the selling pressure, with today actually being a bit of an outside day in terms of that volume, trading a total of 118,000 contracts in the July. That's the single biggest day of volume in the July contracts history right now.
And now
So,
bear with me for one moment and let's talk pattern
yes.
recognition. So if I look at that chart with one eye closed, the same way I rode my bicycle home last night, if you look at that chart, that's a head and shoulders. That right shoulder's a little sketchy because it's just the one day, right? From the
Right.
third.
And that was that big outside day on the third that exactly you're saying. Very quick
Right.
up and then smack down back to that neckline.
And so that makes for an upward sloping neckline, I believe. And if I remember, we don't necessarily want to see that upward sloping neckline. However, the travel that we have, the distance that we have come through that upward sloping neckline, if you measure from the top to the neckline, I think it's 50. Just give me a quick finger estimate. What is that? 70 cents?
Yeah, 75 down to 20. It's a 50-cent slide effectively from where the 18-day down to where we are. And that 18-day moving average came in right along that upward sloping neckline, as you say. So
now you've got neckline resistance, you've got 18-day moving average resistance. You want to measure the completion of that pattern, whether it's a single or two times. You're still talking about the possibility of further price erosion should that pattern play out.
Absolutely. And one could say that, hey, there was a big sell side volume today. That could be a little bit of capitulation in some regard. But I really, you and I think favor the type of retracement or pullback that sees diminishing volume down to the end, and then that big explosive reversal volume the other way, which arguably corn and beans, we kind of felt like we might have had that yesterday. And certainly yesterday's price action was, a reversal of the same price action we saw from the top a couple weeks ago, where we saw a big spike in sell side volume, a down day. Yesterday was a big spike in upside volume and an up day.
And there's some trading to be done. There's some trading to be done on the other side of that. We got a WASD on Wednesday.
1,000%.
For sure.
Right?
For sure.
We got a lot of news coming up, big fund positions. So things are going to continue to be volatile, I think, is one of the key takeaways from what we're trying to get at.
Amen to that. So beans, we opened the week at 1204 and a quarter. The high was 1205 and a half. Hold that number in our head. Low 1174 and a quarter. Last trade I saw was 1177 and a half. Down here again, down 27 and a half on the week. Yuck. Funds estimated short over 20,000 contracts. Now that 1205 and a half was the high. We opened the week at 1204 and a half. We have fallen away from the big round $12 number convincingly, right?
And in a hurry. Wow.
Almost
and
outside
again,
day
that
down
$12
today.
area. Yeah, if we had made a higher high against yesterday, today would be a sweeping reversal, outside day down. Instead, it's just a lower low and a lower high after yesterday's big day. That took a lot of work and effort to unwind, and yesterday's volume was almost mirrored today to the downside. And rejected from that 55 and 100-day moving average, like we were talking about in corn. Similar rejection here in the beans.
Bean fundamental
Interesting,
situation.
they were unable.
Go ahead.
I'm sorry.
Bean fundamental situation a tad more precarious than corn, right? Corn
Absolutely.
showing great
Still have
volume,
that time.
disparate. We're sending business to different places.
Hmm.
People knocking on the window, Spain, but beans, it's like Chinese are staying away in droves.
Yes.
There was an
And
export
even
announcement today.
Yeah, and even selling some soy meal on the open international market, China is, which is kind of non-characteristic. I think a little bit of a shot over the warning bow of both, Argentina, Brazil, and ourselves here, which, hey, I will still be a proponent. We need the OPEC version for soybeans, and the United States and South America need to get together and start working together against our common, counterpart here, because there's no reason that the Chinese should dominate so much the pricing power here. I was just going to point that after all that selling pressure, it was interesting and kind of impressive that they were able to take the beans off their lows at all and not drive down into fresh lows. It does make me scratch my head and wonder what's going on. But like you said, we're at a precarious time in the market. We've got a WASDE report coming up. There's big fund volumes, flying around, and price action today and yesterday feel a lot like clearing the book, so to speak, where they try to take out both sides of the market, wipe out all the speculators, and kind of leave the market, the corpse of the market there to try to figure out what it's going to do next week.
As we go
Um,
into the WASDE, right? And certainly if you're
right.
gonna I'm reluctant to use in this venue, I'm reluctant to use the phrase tape painting, but if you're gonna lean on beans, that $12 level is a great place to push it away from.
Certainly psychological levels that we're
Absolutely.
all mentally
Absolutely.
thinking about, right?
And
Because you
so
got to
now we
take over 12 before you go to 13. And lastly, on the fundamental note for soybeans here, that may keep things a little touchy is the notion that, hey, all those corn acres that arguably maybe didn't get in, there is definitely an argument here that there may be some swapping to soybeans. Might be a reason that things are a little heavier here, even though the conditions and things are looking, brighter for corn and what have you, and you'd think, oh, well, then, whatever. But point being is that anyone that had the opportunity or was maybe pushed into a late plant situation with corn might be seeing, and maybe they'll talk about this on the WASDE report or not. It's usually maybe a little early, but we know they have the insurance numbers to start settling up on acreage here. So this report becomes a little more important. And on that note, come join us next Tuesday where Joe and I will be getting together to do a
Tuesday.
little pre-WASDE week recap here ahead of that Wednesday report. Um,
Let's talk
and
about
sorry,
oil.
getting that.
That's okay. Let's talk about oil.
Sure,
Open
let's
the
move
week
on.
45.52. The high was 45.52. Low 43.03. Last trade I saw was 43.63. Down 189 on the week, with the funds estimated to be short over 40,000 contracts. I don't know what we can say. Is there anything we can say about oil?
Green oil here. I mean, I I honestly was so fixated on the meal or on the bean complex today, and meal's actually impressive reversal off of its lows, but the oil has just been a drag, for some time now. Crude oil can't get off of its legs, so the biofuel kind of discussion is I don't want to say off the table, but it just seems like every turnaround we're saying it seems like there's some negative news on that front. And a big reason why, hey, all that promised demand and everything we want is just not there yet, right? The cake is there, the bread is still, the dough is still rising on that story, and there's nothing to really talk about or put in the oven and bake yet.
You can greenwash the car all you want, but sooner or later you got to drive it with something. For meal, we opened at 364.70. The high was 365.50. Low was 354.70. Last trade 360.70. There's that comeback that you were talking about. That
Yeah.
was down 4 on the week, but not nearly as bad as it could have been. Here's an interesting estimated that the funds are still long 107,000 contracts of meal.
It's just a weird thing to see, right? The one place they're really long here is in the meal. And that doesn't make you feel great about the rest of the complex, because if meal's going to rally, it means they've got to get longer is generally the thought here. But closing, back inside of yesterday's price action, bouncing off that 55-day moving average again, I think we've got levels that are being respected in corn, wheat, and beans, all respectively, and even bean meal, right? These big daily technicals, watch them because they're clearly matter to this market. And to that point, next week, if we take out that congestion zone to the upside for corn and beans, well, that says something too, in my humble opinion. And there's other levels to then consider above there. But this isn't a market for very liberal speculation here. When big levels are kind of staring at you in the face, use them, in your trading plan accordingly.
Absolutely. Absolutely. How about let's jump into a few of the news stories this week. You want to start?
Yeah, sure. We've got a number of losses out of Brazil in the soybean market scene. And excuse me, the floods of Brazil are now being totaled for soybean losses to the tune of about 2.7 million tons. The story coming from Reuters. Soybean losses related to the recent floods in Brazil in the southernmost state of Rio Grande do Sul were estimated at 2.71 million metric tons. And a crop emergency or agency, Emitar, said on Tuesday, in line with private forecasts ranging from 2.8 million to 3.8 million tons. So, arguably, maybe even a little bit lesser than some of those other estimates. But Rio Grande do Sul's soybean crop production was said to reach 19.53 million tons this season, down from 22.24 million tons previously forecasted, and pegging their soy yields at 2,900 kilograms per hectare. Next time I'll get us the bushels per acre kind of equivalent there. But Rio Grande do Sul's livestock production was also severely impacted in flooding and will require a long time to recover. Emitter said, citing data from the state's farm and rural development agencies. Some 3,700 farmers were affected by this, mainly poultry producers who lost an estimated 1.198 million head after floods and landslides in some areas. But I will say this. Poultry of all of our livestock is the quickest to recover.
Spin
and
it
honestly,
right up.
will only take about 8 to 12 weeks, right, to go from egg to broiler to begin with. So long as they can get their hands on some new breeding stock, give them 3 months to half a year, and things will likely be back in full swing. But that could diminish some domestic demand there for some corn and beans as well.
To
so
that
something
end,
else to think about on those.
To that end,
Yep.
There's still a lot of debate there's still a pretty sizable gap between the USDA and the authorities down there. And so it
Absolutely
seems like we're kind of coming to a middle ground on that, but it's possible that these numbers, the number on these losses, could get bigger.
Yeah, and that's something to continue to monitor. There were also substantial losses in beef and beef dairy cattle and pigs, fish, and bees without providing details. In rural areas, they said that more than 206,000 properties were affected with losses in production and damaged infrastructure, including roads and food and storage facilities. So it goes, it's one of those things where we know estimates on how many actual beans might have been lost, but the infrastructure impacts are, totally unpredictable here.
And also significant.
Absolutely. And could
in
mean
terms
that
of impact?
many more millions, right? The beans and things that weren't affected, if there's infrastructure loss, it means everything was affected and might not even make it to international markets in time. So, still developing story, and we will continue to report on it as more develops. We also had news here that a better safety net for young farmers is going to be coming out. Chris Clayton from DTN mentions that all senators working out their details for a farm bill. Young farmers on Tuesday told them about the need for base acres and higher reference prices, as well as access to crop infrastructure and better terms on loans. The Senate hearing follows the House Agricultural Committee's advancing its version of the farm bill out of the committee last month. That bill boosts the farmer safety net, but is opposed by the majority of Democrats over cuts to nutrition and other budget moves to fund the bill. Unfortunately, all these special interest things are getting thrown into what should be no-brainer
bipartisan cooperation.
Bipartisan things, right? But the Senate bill would allow new farmers to establish base acres. And Senator Debbie Stabenow, a chairwoman of the Senate Ag Committee, noted that we can talk about ARC and PLC.
ARC being agricultural risk coverage, acronym and jargon smashing there. Let's get that out of the way. The ARC, agricultural risk coverage, and PLC, price loss coverage, right?
Right, and absolutely. And if you don't have base acres, you don't have a chance to get that. So, again, reiterating and I think finally, taking into account the true needs of the farm. Still, Stabenow suggests that this House bill would adversely affect beginning farmers because the bill would increase ARC and PLC by an extraordinary 70%. So, it's, to give kind of for those that aren't too familiar with this stuff, to give an idea, this seems a lot like when in real estate, where we enable, and across the country, we have a first-time home buyer tax credit and first-time home buyer programs that also require you to buy an insurance plan that's tied in and raises the cost of the mortgage. So you may be able to put little up front, but you have a back end cost here hitting you, while also relaxing or removing payments and eligibility limits for larger farms. So if you happen to inherit more land, or they think that you don't qualify or can afford this without it, which is kind of backwards to me, because hey, a young farmer with more land is going to have and need a bigger safety net. But nevertheless, Senator Tina Smith, a Democrat from Minnesota who chairs the subcommittee, said Tuesday she has heard more about the challenges of younger producers finding access to land. And I think that's generally accepted everywhere when we see land values valued to what they are and being gobbled up by major conglomerates as well. She also cited that fewer beginning farmers receive assistance from the USDA compared to established farmers, and the majority driver for that is the lack of base acres. So again, they're getting back to the problem of the base acreage assessment, trying to establish, create a lower threshold and benchmark for newer farmers to get into this program.
And sort of
also cited the study.
And sort of remove the conundrum for this shift that's happening in American agriculture, where you have to have younger producers, they have to have access to land, and it's so you scramble to get the land. Then when you get the land, you don't have enough acres to get the kind of coverage you need. Makes it doubly difficult for
absolutely. You get the land, and then you don't have the protection everyone else does. You're almost
behind the eight ball
scheduled
before,
to fail.
Yeah, right.
Absolutely,
exactly,
right.
Exactly.
The system is almost stacked against you in that regard. So Smith also studied a study from last year that cited from the Food and Agricultural Policy Research Institute, showing that a 10% increase in PLC would result in hundreds of millions of taxpayer dollars going into the pockets of landlords, not investors, not farmers. So we just heard them say 70% increase in this stuff, right? Like, if only the 10% is going into, so the whole idea now is that they need to do something about those base acres, lower that benchmark, and make it so that the big super conglomerate farms are not taking advantage of these programs, and they're actually getting to the hands of the young farmers who need it.
At the expense of younger farmers, younger producers.
Absolutely.
For sure.
Right.
For sure. The next story, digital acreage reporting is here, from Katie Missick Dellinger off of DTN. The 2012 Farm Bill mandated that USDA ease the burden of the reporting requirements for Risk Management Agency and Farm Services Agency, RMA and FSA programs. 12 years later, the agency has built, tested, and approved an electronic clearinghouse that will enable electronic submission of required acreage reports. This is interesting to us as we build out the Zaner Farm P&L, which should most certainly work for this type of digital information requirements.
Right, that's the intention here.
Farmers can submit RMA data through their crop insurance providers or through approved third-party companies. FSA data can be entered directly or through an approved third-party provider. The only approved provider for submitting FSA data in 2024 is MyAgData, although MyAgData CEO Michelle Trussell expects there will be more approved providers indeed in the future. I would anticipate we could be one of those. Trussell expects farmers will begin filing electronically in greater numbers as they become aware of the time and cost-saving benefits. USDA is doing very little to no outreach on this at a national level this year. Like most other software programs, there is some upfront time required to get the account set up. But for most, connecting MyAgData to their cloud-based precision planning software, which includes large manufacturers of equipment, takes about an hour or so. Aside from saving time, filing reports with precision planning data allows farmers to report actual planted acreage rather than using FSA's common land units, or CLUs. Most of the CLUs in use today were created in the early 2000s by technicians hand drawing boundaries from the best imagery available at the time. In the effort to capture all the tillable acres possible with this process, the result was these CLU field boundaries are overstated by 3% to as much as 10%. That is rather incredible, don't you think, Dan?
Wow.
Tressel said
Yeah.
the unintended consequence of that is growers are overpaying for crop insurance based on their excess acres. The result is that switching to actual planted acreage saves about $3,000 on a
Wow.
1,500 acre farmer's premium for crop insurance. Now, that to me seems like a significant amount.
Yeah, that's a huge amount. And honestly, a place where maybe you don't thumb your nose at technology or, the old technology that we need to update because, hey, this is a place that you could save some money by getting the real data that they're not overinflating without your input or knowledge. Seems like there's some changes there that need to be made. But like you said, there's going to be a lot of competition in this space. And we anticipate to be one of those to help farmers actually track this data and collate it for you.
Only makes sense. I think that that completes our hot news story. We would probably be remiss if we didn't mention one thing that folks should keep an eye on. And I have to admit that I don't have an absolute handle on how this is going to play out, but tax changes for Brazilian farmers impacting decision making by those farmers there in Brazil. We want to continue to watch that story, don't you think?
Absolutely. And another place, right, where, man, don't you think we need to get together with South America and start working together at some of these things so that one, we can know what's going on down there a little bit better. But if we were a little smarter about this, we'd probably all try to do things along the same lines as, on those tax fronts. But
is that a book back there on your desk about how to speak Portuguese? Is that what's going on here?
Yeah. I wish. I can barely speak English. It's a miracle I can do this at all.
The other story, which I'm surprised Carter didn't push on us this Friday, is that it would appear that there has been a human transmission of an one of the versions of the bird flu for somebody that was exposed to what I think were dairy cattle in Mexico. I don't know if you caught that one, but
I did. And I believe the person died of other complications.
Unfortunate thoughts and prayers, but the thinking there is that this person had significant comorbidities, and I would be tempted again to say, even in this serious case for this person and their family, even to say that this is not something that is worrisome. But here again, this may be a story that folks want to, unlike I have done, which is just discount out of hand. I am starting to think that maybe we got to pay attention to this.
Yeah, I think you pay attention to it, but still remember this was a death with H1N1 or the bird flu, not a death from it. And those words are very important when you consider what's really going on.
Certainly.
But yeah, we got a good question this week from Carter.
It takes us to our Carter, the producer question. My goodness. Okay, Dan, if you could be any animal for a day, which would you choose? Which animal would you choose?
Any animal for a day. I'm going with a hawk. I want to be able to fly. I think that would just be real cool.
What if you caught the bird flu? Would that be just your luck if you were a hawk for a day and all of a sudden you catch the bird flu and then you just spend your whole day in bed? Maybe drinking chicken soup.
That'd be terrible.
But
a flying apex predator, I can't think of what would be cooler.
Yeah.
How about you, Joe?
I think that's a great choice. I really do. And this to me is a great question. I struggle to find an answer. I guess I don't really. Sometimes animals can have some bad luck, right? What if you decide that? It's a tough question. How about like a tiger? Can I be? The only reason
I say this,
the only reason I say this is that there's a zoo in Michigan City, and in years past, I would take the kids to the zoo, and right at the beginning, right as you walked into the zoo, there's big giant turtles or tortoises or whatever, and then you look to your left, and there was an enclosure made of just regular chain link fence that you might have in your olden days suburban
Sure.
house.
Yeah.
And these tigers would run up to you, and the only thing separating you from the fence was maybe some shrubs. It's a zoo in Michigan City, don't get me wrong, not the fanciest zoo. But then these tigers would stand up with their paws on this fence, and you don't have a frame of reference for how serious tigers are until there's one standing in front of you. You know, I mean, these things were huge, and the kids would take off running down the enclosure, and the tigers would chase them, and you would just thank the Lord that there was that fence, and you'd wonder how long is that fence going to hold up, because the tigers are chasing the kids, and the kids would run back, and the tigers were chasing them. But they were pretty cool animals, I got to tell you. I'll be a tiger for a day, but I promise not to chase any kids. How about that? I won't kill anybody. They'll just be chilling out under a tree.
Well, there you go, everybody.
Good job.
Joe a
Good
tiger,
job,
me a
Carter.
hawk.
Yep.
Thank you for listening to us this week on the Zaner MarketCast. If you need more, just because you can't get enough of us, you can always follow us on Facebook at Zaner Hedge on Twitter and LinkedIn at Zaner Group. If you've not already, check out our daily hedge hotline, as Joe is mentioning.
It's free.
Is completely free, where you can call in every day to get the daily agricultural updates from our one and only Ted Seyfried, who you may have seen on RFTV and RFD TV and Market to Market. He was there in studio this week doing it live. That was pretty cool.
Nashville,
the best
Tennessee.
part is that it's completely free. You can find the sign-up links in the comment section that we've provided. And thank you again. Be sure to comment, drop us a like, and follow us on the podcast to not miss a beat. And we'll be back with you as price action develops.
On Tuesday for that WASD update, right?
Oh, yeah, that's right. We will be back with you on
Very
Tuesday for a little bit of a pre-WASD report. Have a great weekend, everybody.
Have a great weekend. Be safe, guys.